Hey folks, Dan Frio here with your market update for July 22nd, 2024. So it looks like we're going to have a power change in D.C. We have President Biden's finally stepping aside and giving new blood into that party. So we'll see how that goes. And the reason why I brought that up is it's the headlines everywhere. So unless you've been under a rock, President Biden has stepped aside, and looks like Vice President Harris might be taking the reins, but there'll be other people joining this platform. So throughout the week, we'll go over each candidate as they're coming through or to the markets, and I'll explain to you kind of their positions and what my thoughts are that they would do for the markets, stock markets, bond market, real estate market, even cryptocurrencies. So that's what we talk about here on this channel. But let's get over to the economic calendar for the week to give you an agenda, what to look for this week. We have one piece of the puzzle coming in Friday, and it's huge. So let's get over to the day headlines that we have right now. Let's go through Monday. There is no news on Monday. That's why I do this report right now. Tuesday, we have existing home sales. We'll go over that on Tuesday. On Wednesday, we have the new home sales, manufacturing numbers, and so forth. That shouldn't be really a market mover there as well. Thursday, it might just be because we have the durable goods orders, GDP coming in, and also the initial jobless claims. We get this every week, so we'll see how that goes. And then Friday, the big number that the Federal Reserve monitors or puts the most weight into, and that's the PCE. This is the overall inflation number that they watch. So here's what we're going through right here. Here's the probability that what the Federal Reserve is going to do at the next meeting. Where am I right now? Well, I'm at the CME Fed Watch tool, and the Federal Reserve is meeting in 9 days and 3 hours. What are they going to do? Well, the probability is right through here. They're not going to do anything. Okay, so what you're seeing across the screen right there through here, it tells you the meeting dates down through here and the interest rate right through here. What the Federal Reserve controls is the federal funds rate. Okay, that's the only rate that they control. So right now at the July meeting, there's a 97.4% probability they're not going to do anything. Now this whole thing flip-flops on its ear for the following meeting. We have the September 18th meeting saying now there's a this is rounded to 94% chance that they're going to cut rates. So I thought I would show you this interview. Becky Quick from CNBC interviewed this person. Now this will be our third former Fed official telling us what they're expecting from the markets from here, basically till when the Federal Reserve meets. She's going to name some things like disinflation. Now that's a word I'm going to start looking up because all of a sudden everybody is starting to use the word disinflation instead of deflation. So I'm going to figure out why they're saying that, okay? And you'll notice in her speech, you guys might not notice it, but check when she's talking, she'll say disinflation. I don't know that. She's also going to mention core. When anybody mentions core, what that means is it's a data set number that they pull out and they strip out food and energy. Why? Because food and energy are hugely volatile. Here's another example. On my way to work again today, and I give these stories every day. I was at the gas station yesterday. Gas in my area is $3.87, went by today and it's $4.25. Okay, oil prices haven't done anything. I'll show you that here in a second. So what in the world's going on? So that's why they strip out food and energy. It's just because of that. So let's see what she has to say. She's going to say that. They're going to also ask her, do they think, or does she think, or does Becky think, the former person, thinks that the Fed is restrictive? Okay, so here's what most people think when they say, okay, is the Federal Reserve restrictive with their rates right now, or are they a little loose? Or what? So basically what they look at is they're saying, okay, what is the federal funds rate? Okay. And then how does that equate out to inflation? So if that number is a positive number, that means they're restrictive. If it's a negative number, they're non-restrictive. So right now we have the rate, the federal funds rate is 5.25 to 5.25 or 5.25 to 5.5. That's the federal funds rate. Inflation rate right now they're saying is like 3, let's say 3.1, 3.2. So that leaves us a positive number. That means they're restrictive, but we'll see her context on that. And then also, here's the one thing that really I've been trying to drive into people's heads, and maybe I'm doing it discreetly and you don't understand. I'm trying to change your mindset because so many people are saying, Dan, I'm broke. I have no money. I have this. I have that. Let's try to change that mindset because she's even going to say in this interview, there's a big disparity now with the haves and have-nots. Okay, so let me explain this. The haves have a home. They've got good appreciation over the last couple of years, and they're locked in at a fantastic interest rate, okay? The haves also normally have some money, so they'll have money in the bank, the stock market, and maybe CDs or interest or just savings accounts. Well, those yields right now are pretty darn good. They're the highest level they've been in, I think, 2, 3, maybe even 4 decades. Okay, so then you go to the have-nots. They don't have a house, so they're dependent on what the landlord's going to do. They don't have any money in the bank, so these interest rates on the high side aren't helping them on their returns. Where it's really hurting them is on the credit cards, the borrowing. The have-nots don't have the money to do these things, so they're borrowing that money. The borrowing costs are extremely high right now. So check out her video. I'm not saying it's good, bad, indifferent. I'm not trying to disrespect you. I'm just trying to explain to you how all this kind of ties together. So let's check it out. So Becky, take it over with the interview with the former Fed official from the Kansas City Fed Reserve. Here we go.
Friday, we are set to get the latest PCE reading. That is the Fed's preferred measurement of inflation. That'll come just a few days before the central bank's next rate decision. Joining us right now is former Kansas City Fed President Esther George. And Esther, thank you very much for joining us this morning. Why don't we just talk a little overall about the market's expectations for a rate cut? The Fed has been saying for some time that they anticipated a rate cut in 2024. The market is betting almost in a united front that that's going to come in September. Does that sound right to you?
Well, good morning, Becky. Yeah, I think the combination of the Fed signaling that they peaked at their rates months ago and continuing to talk about rate cuts has set the market up again for high expectations around a September rate cut. And I think I'd be a bit more cautious myself. I do think the Fed is beginning to see the progress they've been looking for. We're all listening for the word confidence in their remarks to see whether they're getting close there. But I think we still have data to see that will give them the confirmation they're looking for that they can begin that process of rate reductions.
If the data goes their way and there aren't any big surprises between now and September, would you expect that they'd cut rates then?
I would expect that. I think their signal has been a strong one, that that's what they would like to do, that they are anxious to secure what many refer to as a soft landing. And so I think at the earliest possible window, I would expect September would be in focus for them.
Is the core PCE the most important data point?
Core.
Well, I think the headline, of course, is the target for them, but the core is telling them something about the momentum, about the strength of that inflation and where it's going directionally. So I do think you'll begin to hear more and more about how core is moving, how broad-based this inflation, disinflation is for them, and that's where I think the weight is going to be. That number is going to move around, as we all know, but keeping an eye on really what is the core driving them is always an important measure.
Do you think Fed policy is too restrictive here?
Restrictive.
You know, Becky, I have not thought that. I think you see certainly areas of the economy where that restrictiveness is coming through, and that tends to be in a segment of the consumer that rely heavily on credit card debt, on auto lending, where you've seen those rates really manifest themselves. But of course, where we would typically expect to see mortgage rates and other things, people have locked in low rates. So it hasn't felt restrictive when you see how low unemployment is, when you see how strong growth has been. I think it's fair to raise the question of, is that policy really restrictive?
It's kind of a weird situation. It creates inequality to a certain extent between the haves and the have-nots. If you have a house, you're locked in a low mortgage, you're in decent shape. If you don't have a house, you are looking for a place to live or to rent or to buy. If you are looking for a new car, if you are looking to pay off debt, you're in a much trickier situation.
Absolutely. And I think to some extent, this rate environment, as past rate environments have been, can have distributional effects. Remember, we went through a long period of time with zero interest rates. And as a Fed president, I would hear very loudly from those that relied on savings and weren't getting any return then, while those that borrowed were quite happy. And of course, that's changed now.
Yeah.
And you see those effects coming through, particularly on a segment of the population that doesn't own assets and doesn't have those assets to earn from.
So does the Fed care about that, or is that just kind of the way the cookie crumbles? You're not going to be able to please all constituencies all the time.
Well, I think they care deeply about it, and you see them talk about it. The regional Fed presidents hear it in their regions. But the truth is, the Fed is dealing with a macro tool. And as you've often heard it described, it is a blunt tool, meaning it can't surgically help one sector and at the same time try to recalibrate demand in another. So you have to always be looking at the macro picture, even as you pay very close attention to the underlying micro elements.
So that's what that was her take. And you saw from what she said is she's expecting them to cut. So that's most likely what they're going to do. But she also talked about the disparities, how you focus in core inflation, things like that. So hopefully you learned a lot from there. I don't think I really have to put a lot of that into layman's terms. You kind of understand what she's saying there. So now I'm going to do a little spin. You guys saw a video most likely that I did on Friday of somebody called me a troll. I kind of see why they do this now. Look at this. Here's my YouTube channel. So I usually get 2,000, 3,000, maybe 4,000 views a day on a specific video. Look over my shoulder right there. What's that? I'm teetering on 10,000 views. It's an anomaly. Why? Well, let's get over to it. I'll show you what I did. Zillow's crashing the markets. Crash. And I even had people saying, Dan, oh no. Are you expecting the market to crash? I'm like, no, you got to watch the video. So when you put crash in your titles, you can probably get 2, 3, 4 times the views that you get. I don't believe in the crash, and folks, so I won't be doing any videos in regards to the crash. So just wanted to do an experiment there. So that's what we're seeing right through here. What's the markets doing, or how they reacting right now? Because we had a dismal Friday, just a complete dismal. Dow Jones is picking up some steam. It's up 25. S&P's up 37. Dow Jones is coming roaring back, up 200 points. Got oil down, which is fantastic. Let's get over to mortgage rates. Mortgage rates are going to come off their highs that we're seeing right now. Let's get over to the MBS market. So we got this. So the mortgage bonds right now are up 6. So we're going to see rates just teeter maybe by 0.1, 0.2. So you might just see interest rates at 6.8. I don't know, 8.7, 8.8 by the end of the day. But I think as a lot of momentum starts to get going, once there's a clear picture of what the politics are going to look like with things, then we're going to be able to see what the worldview looks like with things and a bunch of other things. So every day we're going to kind of take a dive into some of the candidates that are out there, and I'm going to give you my true feelings behind that. So sorry, you're going to probably start posting a bunch of political stuff down below. You know, I might read it, might not, but I'll at least give you what my take is, and I'm going to try to be as unbiased as I can on the political side of things. Just their policies. Is it a good policy for the markets, for our economy? I'm not saying that what's good for me and you. I'm just saying what's good for the overall economy in general. Okay, so that's what we're going to talk about this week. And like I said, there's really no things on the economic agenda for today, so the markets should be just completely flat. I don't think anything's really going to change in interest rates basically until about Thursday or Friday, when some of that economic news starts to come in. So that's my report for today. If you're out there and you're like, Dan, what do you do? Okay, we watch your videos and pretty cool, but you know, what do you do? Well, I'm actually a loan officer. I can help you if you're looking to buy your first home, maybe your first investment property, refinance, reverse mortgages. We do it all. So how do you reach out to me? Well, here it is, therateupdate.com. I work at ServBank, so I hold a federal license, meaning I'm licensed in all 50 states as well as Puerto Rico. The unique thing about this is, how many other federal banks can you call that's also a broker? So you're calling one federal bank. We're going to take one application, one credit pool, and we're going to shop your loan up to 50 different lenders because we're one of the top mortgage brokers in the country, and we're here to help you guys with one click, one application, and one credit pool. So that's our report for this afternoon or this morning. I will be back at the closing bell to see how my predictions panned out. And if you got any questions, leave them down below. If you have any comments on what kind of videos you'd like to see, leave those comments down below as well. I read those often, and I try to appease what you guys are looking for. So thanks so much for watching, guys. God bless. I'll be back later this afternoon with the closing bell. See you then. Bye-bye.